Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it. Kia ora, welcome back to another episode. We've got a lot to discuss today, and to unpack everything that's kind of happened in the past week, we've got Elliot Smith back on the show. If you remember, if you were here about a year ago and 5 days to be exact, we were counting. We had Elliot Smith on the podcast. He is Kiwibank's Chief Customer Officer for the business bank. And Elliot, I think I can't believe it's been a year since we got you back on. There is a lot to talk about, but something I wanted to start with is the last time we had you on the show, there was this really crazy stat going around about the business bank. And I think that was that in the past year, this was now last year, 70% of all of New Zealand's business bank lending came through Kiwibank. Do you have another stellar stat for me today to start the show about the business bank?
Perfect. I actually do have a great stat for you. Nice. The number has come off a little bit. So now, unfortunately, we're only accounted for 41% of all lending in this country with, a 5% market share. So they're back. A few of the other banks, which is good for the economy, but we're certainly pulling our weight, which is really important for a bank that only has one market, New Zealand.
Yeah, absolutely. But I was thinking of another stat that I've heard going around.
Perfect.
Maybe you haven't heard it yet. Somebody wrote, I think it was Jenny Roof, did an article on Kiwibank's Business Bank, and in the year to June, the entire banking system lent $1 billion. But Kiwibank's book actually grew by $1 billion as well. So basically all the other banks were net zero while Kiwibank was probably the only one really growing out there.
Yeah, and really well thought through article from Jenny. One thing that's probably worth explaining is that that's for us in terms of our balance sheet growth is both lending to businesses for their growth and also lending to our business customers for some of their home loan needs. So the RBNZ definitions can mix that up a little bit, but the net result obviously is that we did $1 billion of lending to businesses, and really important lending in a market that's been super flat. We are really keen to help businesses that want to do something.
That is such a crazy stat. I mean, even just the 40%, you say it's come off a little bit, but for the size of our market share, that's really quite commendable to see. And, we went and saw Kiwibank businesses last week, and we were just kind of talking to them about their own business, and they were just saying how Kiwibank was so good in that time where it was a slowdown, but, to avoid, a credit crunch, we saw that our doors were still open, whereas other banks were kind of, reducing their agri space and, not doing so much in the other space. So it's good to see that we've got a bit more coming through.
Yeah, thanks, MJ. I think it's important, we are a system, so it's important that all the banks play their role. One of the interesting things about the last 12 months has been the fact that whilst we've been open for business and others not so much, they are now back in the market. And that is a great thing for businesses. Certainly that there's more competition, which is a good thing for this country. There's more access to capital, and that means that even though the deal flows hasn't really picked up back to sort of levels from a few years ago, customers that are out there doing stuff are getting a great deal, and that's that's great for the New Zealand economy. Now it's tough for us sometimes because we like to win, and when you are losing on price or something that doesn't give you a warm glow, but it means the customers had a great deal, and that's part of the role we play. We're just got to win more than we lose, to have the impact that we'd like to have in this country. So, yeah, at least there's now a bit more movement back in the system, and customers are starting to do things. We talked offline, and some of the feedback that we had from the session last week with the Auckland Chamber and customers was just this idea of, are the conditions right to do something? We had another 50-point cut, which I'm sure we'll talk a bit about today, a bit late, so then we've got to do more. And then I was talking to a property investor, and they said to me, oh, well, now that there's more signalling of rate lowering, maybe I'll wait a bit more. I was like, oh, no, this sort of sitting on the sidelines, I think is not, it's not great for this country. So trying to encourage people to make that decision and to make that investment choice, I think, is a role that we can play.
Yeah. It's hard to hear when there's a signal for further rate cuts, and then some may be just trying to catch the bottom and trying to wait for the very end, but that just delays the recovery. And to some extent, maybe that's happened, but we do need to see a bit more activity, and I think conditions are getting to that level where, if you're a property investor, you're kind of looking into the market with a bit more interest. If you're a business, you're a bit more in a position where you can take a bit more risk going into 2026. So I think now, with, as we call the cash rate being in stimulatory territory below that 3% neutral rate, that maybe we're starting to see a bit more interest going into 2026.
Yeah, I'd like to think that the conditions in aggregate are much more conducive, MJ, as you point out. There's still, I think, your statistics last week about something like 40% of all fixed rate mortgages are still to roll over the next 6 to 9 months, but that period shortens because everyone's on shorter term. So the cuts are going to flow through quicker than maybe they would have in prior years. And if I'm a business owner thinking about, are people going to have more money in their pocket and are going to be opening their wallets over summer and into the new year, certainly I'm really optimistic that those conditions are in aggregate getting better, and hopefully that, it's a bit like momentum generally, isn't it? It's a precious thing. And when you don't have it, you know how hard it is to get the ball rolling. Exactly. And when you do have it, it's really, really important to keep it going. And I think we just really need that momentum from some of these decisions to speed up and help more people make decisions, I think.
Yeah. I'd say that momentum was starting to get there. We were starting to see that at the beginning of the year. The Reserve Bank had cut interest rates and business confidence was on the up. But then obviously the orange guy overseas has kind of derailed that a little bit, and it's made businesses and households a bit more cautious. Would you say that was kind of the biggest kind of, I suppose, impediment or kind of uncertainty that kind of saw businesses hold back this year?
And just before you take off, because the last time you were here, we were at a turning point. You know, we had just seen a business confidence survey showing that businesses were feeling positive. We were having the Reserve Bank starting on their rate cutting cycle. Everything looked on the up. And I think the last episode you're on, we were feeling pretty optimistic. And now that's all changed, right?
I got a great sense of deja vu rewatching. It's always a bit awkward when you go and rewatch yourself on video. But the things then, a year ago and a week ago, about the fact that interest rates cutting, bit of business confidence, into 25, I certainly felt, and even in January, February, March last year, it still felt like the wheels were rolling along. And it's certainly, I think, MJ, that question about that uncertainty, but the aggregate nature of the set of uncertainties that came through with not just those policies, but other conditions, people are reluctant to make sort of the bigger decisions in the face of that uncertainty. And I think we've just really struggled over the last probably, where are we, October, 6 months at least, to navigate through those uncertainties in a way that gives businesses enough confidence to make, some of those bigger choices. I actually had a look at a stat the other week about the budget. And, when I was reading the data about the budget that came out middle of the year, 60% of businesses thought it was net positive for the economy. 83% of bigger businesses said that they would be doing something. And I don't know what happened, it was like, someone going to do something, you do something, and nothing happens.
He's motioning the Spider-Man meme. Is what we're doing.
The Spider-Man meme? Yeah, it's that one. We'll put it up.
Yeah. A bit of finger pointing, right? Yeah.
And I think just with all of that pullback, it's not just been businesses, households have also been stuck with that uncertainty. They've pulled back, and what you've seen is that we just haven't had that period of sustained demand. We had NZIER's quarterly survey of business opinion last week, and, I think a net 63% of firms are still saying, demand is our top constraint. That period of activity, they're still flashing red, and all of that is feeding through onto, again, deferring their decisions for another time. We're seeing investment and hiring intentions pull back into the negative, so it's really all kind of consolidating into that.
Yeah, I mean, like it or not, New Zealand is a country that part of its economic psyche is the wealth effect of house prices. And so the nature of people feeling like they haven't had a a wealth increase, and so that confidence about opening their wallets. If you look at tourism back to close to pre-COVID levels, your rural sector is in pretty good health, but that hasn't flowed through into extra spend. It's through into a bit of debt reduction when you look through the RBNZ data on rural lending. So, something hasn't quite gelled in the country this year about the confidence to make some bigger choices. I do think it does stem a little bit from consumer confidence not flowing through, but I think it's that aggregate of all of those things has sort of really felt like it slowed down the economy this year.
Yeah, I think I remember Jared telling me how if you plot consumer confidence over house price growth, you'll see there's a very nice correlation. If you do it against US consumer confidence and say the S&P 500, there's a really good strong correlation there. So you're right that there's just been no wealth effect because the house market's just been staggering sideways. And then for our small businesses, they use their house as, collateral for new lending and all that. And if that hasn't quite been, seen a rise in values just yet, they haven't had the in the financial position to put that down. So there is this kind of, we need something a sort of circuit breaker to actually see things actually start to pick up, right?
Yeah, just on housing to support business. I mean, it's certainly it is what it is. New Zealand's sort of structure at the moment around being dominated by sort of household property investors and household debt in a sense, and we're really keen to see that shift in a structural way, particularly with investment in infrastructure. Some of the things that we think we can do, at least, we've got Startup Plus out there at the moment, which is a pilot with the Ministry of Awesome, and that's really trying to help entrepreneurs who don't have their house to put up as security, trying to back more of those ideas and use, the skills we've got as an organisation around, backing good businesses, because we need more businesses, productive businesses that aren't tied, as tied to the property cycle. We need that industry going well as well. Construction needs to sort of build, but we're really keen to help support more businesses to make stuff, to get the services industry to get jobs going, because that helps the country get more productive.
Yeah, that's like music to our ears to hear that it's about backing, not just the traditional business or the traditional way to do it, because there are so many ideas out there that are just, I guess, software kind of ideas that typically are quite hard to, collateralize or to back. But it's really good to hear on the productivity side of things how that can improve ourselves.
Yeah, I mean, it's not a sort of massive science project either. The idea is actually, use in this stage, early stage at least, the partnership we've got with the Ministry of Awesome, and obviously we're looking to scale that next year. But the idea is that businesses that have got a great business plan, they might be early stage, may even be pre-revenue, but if they've got a really solid plan and we can help them make some early choices, milestones to get them going, then there's lots of great businesses out there that this will suit. It's not for everyone, and certainly we don't encourage debt for the businesses that it doesn't make sense for, but for the ones that it's a good source of capital in their structure, we're trying to get as much sort of doors open for those sort of businesses with a bit of advice and a bit of support, but backing those entrepreneurs is really, really important, I think, for this country.
Yeah, that's great news. Going back to the downside stuff.
That was too positive.
That was too positive. We have to balance out. We talked a lot about the kind of uncertainties that are still plaguing businesses, and some are kind of going through it. But we know that the Reserve Bank, they cut the cash rate by 50 basis points. It brings it to 300 basis points, which puts them, again, I think, among the most aggressive central banks in this easing cycle. That move seemed to be a move to try and shore up confidence. How was, you said you had this, what was it called? Eggs and Economics breakfast with the Auckland Chamber the day after the announcement, right? How are the eggs, first of all, and then how was the economics part? What was the mood like
in the room, you've just had the Reserve Bank cut by 50 basis points when it was kind of a 50-50 coin flip on whether they were actually going to go 25 or 50. We were obviously out here calling for a 50, but if you looked at, all the local commentators, if you looked at market pricing, it could have gone either way. So how are the eggs? How is the economics? And what was the mood like?
Yeah, look, the eggs delicious. Auckland Chamber do a great job of hosting. The economic discussion was definitely not half cooked. JK came in with some pretty clear views on what he thought about the cut. I think if I channel the customers in the room, their perspective was that they believe the Reserve Bank's finally hearing them in a sense. So, we've been calling for a while. I think we're going to have to go lower and maybe even for longer. I don't know. I'm not an economic sort of rates forecaster, but it feels like they're going to have to do more work because the mood is definitely lower than it could have been 6 months ago if we'd got to some of these levels. So, the businesses that I spoke to, and there were a range of them from, half a dozen different industries in the morning before I spoke, actually were all pretty positive about the direction of that move. And so, helping give them, a lot of them actually, we did this, a lot of them were, of that same view about how, who's blinking? But I did get a sense, at least in the breakfast last week, that customers that have good plans and have good business models and have good ideas, can't wait anymore. They actually need to get some growth going for themselves because they want to move product or they want to get their idea out there. So certainly this will help. But it's going to take a combination, I think, maybe some good weather over summer, a few more houses sort of shifting through the market through the spring campaign and, hopefully a bit more tourism coming through over summer, a bit more spend, those aggregate things for confidence building. But it definitely was needed, I think, is the sort of vibe that I got from everyone in the room.
So kind of like relief, I suppose, that, we were saying how it was either 25 or 50. I think businesses would have really liked to see that 50 come through. So it's more of a relief kind of, feeling in the room that, like, as you say, that businesses are being heard by the Reserve Bank. Yeah,
I think that's a good way to describe it, MJ. Relief and a bit of, okay, well, now it's our turn, I think, in a sense. I don't think anyone's just been sitting going, I can't wait for someone else to solve this problem for me. But it does feel a bit around that sort of hesitancy. So I think a few more that I spoke to last week at least were more likely and more conducive to be doing something heading into the new year. So that does give me some confidence, and our job is to be there to listen, to hear, to help when they're ready to do that sort of stuff. So at least that those businesses in that room, and as I said, quite a different range of industries that I spoke to, the confidence I think is returning, and a few more data points across a couple of different sectors, I think, leading into Christmas might give people more confidence as well, which I think is needed.
Yeah. I mean, we've been saying that the spring summer period will be really important for how the economy will perform. Like if we get that momentum going into 2026, it could set us up for a pretty good year. We said survive until 25. That seems like we had to kind of push that out a little bit because of what's happening mostly overseas, which is a threat that seems to be ongoing just with the news last weekend. But I think, it's going to be an interesting time to see how businesses perform and how hopefully household consumption lifts. Interest rates, they've fallen quite a lot. And as we were saying, households have been positioned for it. They've shortened up their books and they've been taking advantage of the lower rates. And I think that then these rates are now moving to levels that are actually encouraging a bit of spending, a bit of investment. So hopefully we get this turnaround into next year.
Yeah, and what gives me confidence, I guess, if you look across the sort of components of our economy, you've got the dairy industry and the rural sector are going pretty well. I mean, there's challenges in the sector, don't get me wrong, but there's the conditions are reasonably positive around milk price payout and those sort of things. You've got tourism going pretty well, and the New Zealand dollar is quite conducive to inbound tourism. You've got exporters now obviously benefiting from the USD NZ cross being, in the sort of mid-high 50s. You've got record low borrowing costs. Unemployment hasn't sort of, dramatically got out of sync with it, so there's not that level of, arrears and defaults. So I do think if you sort of looked at all of that together, it feels like we don't really have a reason not to have a good year next year. I mean, I don't want to sit here 1 year and 1 week from today going, oh, come on, 27.
Yeah, that's not happen.
We're really hopeful for this pickup. As you say, there is a lot of things kind of going for the Kiwi economy now, especially now that the cash rate has been lowered to below that neutral rate that we've been, saying get below neutral, get into stimulus. We're there now, and we still think there's a bit more to come. We're saying another 25 basis point cut in November, so that takes us to 2.25%. And then, as you said, MJ, we're really watching this summer what happens over the summer. We're really hoping that this is it, right? 2.25 and the economy, with that stimulating rate starts to get businesses enticed to do activity and invest, gets households off the sidelines and start spending again. We really don't want to be here next year. It wouldn't be ideal to call for a 2%.
No.
You don't want to keep having to call lower and lower. I know we probably sound like that bank that's always saying lower rates, but we'd really like 2.25 to be the low and for growth to start coming from here. I think the podcast right at the start of this year, and I think I jinxed it because I literally said I'm ready for some positive data and it never came. So hopefully moving on from that.
Yeah, and I was speaking to some of the business teams in the last few weeks around some of the customers, what they're doing, particularly the adoption of some of the new technologies coming, whether it's sort of, the AI boom and sort of agents that go along with that, the productivity benefits, some amazing, New Zealand has got a brilliant entrepreneur and startup community of skilled, passionate people. And there are so many good ideas that, the big ones you hear about on the press, you generate quite a lot of the airtime, but far out there are some brilliant people in this country and with great ideas that are scalable globally, but also quite impactful locally. And for me, that every time I go out and talk to customers, it gives me this sort of real joy and buzz of the the fact that there is hope and there is this optimism of these ideas. And we've been in a funk. I think we got stuck in a rut a little bit, and hopefully there's enough now momentum to go right. Let's gun the engine, get it out of the rut, get some momentum. It's a bit like riding a bike. The worst bit is when you're not going very fast. Once you get out of that and lose the speed wobbles, you're sort of away. But we're like this.
That's a really good analogy.
That is good.
We're gonna have to steal that.
It's your IP. I don't think I can claim it on this podcast.
I mean, that's left me feeling pretty inspired about next year because I think the main message here is that conditions are ripe for a pretty good 2026. I know we kind of probably said that at the end of 2024, but I mean, what can you do? We've had some disruptions overseas, and it's just about looking to 2026 and hoping things will get better. And Kiwibank is open for business as always, a bit more competition, which is healthy, right? But we're looking forward to next year.
Yeah, same. And look, I just think what's the role that we can all play? Us as an organisation can help support more businesses. Each business can make choices that are about growth or not. And we do all have a role to play. Hopefully people are feeling that the role is less risky to play now than it was 12 months ago, as much as I reflected on the last 12 months of what I said, on this podcast. But, certainly I share that, MJ, that idea that, there is some really good things happening. And so, for me, it gives me good confidence, at least, that, customers are keen to do stuff and we're there to back them.
Yeah. Yeah, we're going to have you back again
in 1 year,
in 5 days.
That's right.
And hopefully this time round, we are in that more positive area.
Yeah, I feel like I should target the 100th podcast if this is the 51st. Yes. It feels like good timing.
We'll try to make sure it's the 100th episode special.
Perfect.
Awesome. I think we'll wrap up there. Hopefully that's left you feeling inspired for next year. Again, conditions are ripe. The Reserve Bank is hearing that businesses need a bit more support going into next year, and I think they're delivering on that. So it does set, I think, a better 2026 with all that comes with. So that's it for this week. Thanks, Elliot, for coming on.
Thanks for having me.
Can't wait for you to come back again. But tune in next week for more of this.
You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.
Any views or information shared in this podcast, while given in good faith, aren't necessarily the views of Kiwibank.